Hey everybody, Boris, speaking Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar, March 25 to March 29, 2019. And really, end of the week, we had a massive change in sentiment to risk-off trade. Horrible data out of Eurozone that really triggered that. And then, of course, sell-offs in the equities. And generally, just I think a sense of foreboding here because we've had very easy monetary policy at the same time as data all across the key areas of the world is starting to slow down significantly. The only one that's holding up much better than I think anybody, well, much better on a relative basis is US, but even that is in nowhere near kind of super torrid growth. We're basically at 2% growth. And this week we're actually going to get a GDP reading, so we'll see how well the first quarter went. But overall, basically, what you're starting to see here is the tensions in trade with China clearly having a material impact on Asia. The tensions in trade generally having a very big impact on Germany, which is the core of Eurozone. And that has just, I think, rocked the market at how bad the PMIs were on Friday. All of that is really creating a very negative risk-off environment that we saw Friday. Lots of big sell-offs, lots of takeouts. Yen took out like multi-week lows. So we'll take a look at all the charts in just a second. But I think the key thing to understand is that the levels starting to really move to the downside right now. And we are teetering on the edge of some very key support. So euro still stays in this 14 to 12 zone. 1250 is kind of the near-term support. But that if that 12 goes, that 112 goes, that really opens up the way to a trade all the way down to 110s. I mean, you know, we're still within that zone, but it's a very negative skew when you look at the charts in terms of the overall trend. Yen just completely died out of the 112s, and now is really threatening the 109 level. If you take a look at that, that was a massive break to the downside, and a lot of the yen crosses get pulled to the downside as well with it. The only one that's completely idiosyncratic and completely different in its orientation is pound, because pound obviously, of course, is going to be trading off of Brexit. And here, the situation is as muddy as ever. The only level of reprieve here, the only source of happiness for the longs is that we don't have the 29th of March as a deadline now. It goes unconditionally towards April 12th. They still basically have 3 weeks to try to figure out what they want to do. The latest piece of news, as I'm reading here over the weekend, is that Theresa May is not going to go for a third vote in the parliament because she's afraid she's going to lose it. So at very best, they may do kind of an indicative vote this week just to get an idea of where the MPs are. But they're still trying to desperately scratch out a deal. Otherwise, it may trigger a situation where we're going to get a much longer Brexit extension. The key thing is the market is trading very bullish cable, and the market is just kind of holding this 130 bid in cable. So if you're listening to the price, you buy every dip. But it is a treacherous trade right now because you still don't know. The outside risk that we could have a hard Brexit and just everybody spins out still very much out there. But we do have a couple of extra weeks to give us notice. So the calendar this week, relatively more placid. Last week was obviously, of course, the big calendar with lots and lots of key movements, especially with the Fed and BOE and everything else. This week, the data is much more muted. So we have IFO on Monday. This would be interesting because obviously the PMIs were much weaker. We'll see if IFO confirms. Although IFO, as far as a trigger, has really lost a huge amount of its power. It used to be a pretty powerful move in the euro. Now, unless we have another marked lower expectation here that's just going to drive euro a little lower, hard to see it having much of an impact. Kiwi is going to have some interesting data this week because we have the trade balance data. That should be interesting to see. We're bullish that particular data set right now. That may allow us to hold Kiwi at the 68 bid. Then into Tuesday, housing data, consumer confidence data, all really second, third tier. Tuesday night, which is Wednesday to you guys, RBNZ cash rate decision. This will be interesting because the key thing here is the market is expecting no trade, and probably they're going to maintain a relatively neutral stance. But if there is any kind of a dovish stance, remember, they've actually weathered the whole contraction in China much better than Australia has because New Zealand, of course, provides what's called soft goods, like agricultural goods, which have a perpetual cyclical demand versus hard goods like iron, which has a secular demand. So it'll be interesting to see if the RBNZ is actually feeling the slowdown to a degree where they may hint that they may need to lower rates going forward. That would be massively negative. QE, if they don't, if they sort of come out neutral is going to be the new bullish these days. Neutral is the new hawkish as far as the central banks go. So that should provide a little bit of a lift if they just don't change the language in any kind of material fashion. Into Wednesday, we have nothing really material here, trade balance. Then Thursday, we do have the Thursday data set is actually the most important one, I think, because, yeah, here it is. We have the, well, no, this is Friday's, I'm sorry. The Thursday data set, we have the GDP data. This is a revision data set, so it's hard to say that it's going to be very market moving, but still it'll be interesting to see where we're at. This is the fourth quarter reading, so it's already relatively late. But if there's a downward revision here, it could have a little bit more of an impact to the downside on the dollar. Then into Friday, we have Canadian GDP, U.S. personal income data, all of that kind of, again, second tier, but relatively interesting. The other interesting thing is we'll see the final GDP readings of UK GDP. Also, none of this stuff is really going to be material. I think, as you can see, this week is in many ways probably going to be driven by headline risk, of course, as usual, between Europe and the UK as far as Brexit goes. But also, I think in many ways, headline risk as far as China and the U.S. trade negotiations go, and most importantly, risk from the equity market. If U.S. equity markets begin to sell off materially, you're going to see a lot of risk-off trades coming in left and right. On top of everything else, I haven't really talked about this, but the Mueller investigation has finished. He has delivered his report. It's utterly non-transparent to anyone what happens next, because it's not clear whether it's going to be released in full, impartial, what he's done. It seems on the first blush to be positive Trump in a sense that there is no additional indictments, but that means nothing because maybe the indictments were referred to what's known as the Southern District of New York. That's for most people who are not American, or most people who are not even New Yorkers, is way too much technical jargon. But the bottom line is there still may be an overhanging political risk here for the Trump administration, although as things stand right now, clearly it's seen as a much more positive development than it could have been. So we'll see if that political risk, you're sort of looking around, if you're looking around for movement in the currency market, it feels like it'll be anything but economic data that could be moving currency market as we go forward. So let's take a look at the charts here and just look at where the technicals are, because since economics are not going to be a big impact, we can take at least of an analysis from our technical views. So technicals here, you can see that double top of the 114 definitely established. We have a series of lower highs, so the trend channels to the downside. The only thing that kind of the bulls can hang on to is that we really haven't broken the fresh lows. This 112 double bottom definitely confirmed. More importantly, and this is a really critical thing, I think, if we sort of hold above 112.50 for a day or two, in other words, if Euro cannot penetrate the 1250 level here, Monday, Tuesday, Wednesday, we'll start printing green candles, that's actually a bullish signal. That actually means a higher low here. It means we can come back and try to run for the 1400s again. So you have to be very nimble. I think you have to really look at the price action much more than anything else, because if you sort of marry yourself to a fundamental view here, you could be in great danger of getting squeezed out to the short side. Right now, the whole game, the whole tug of war rests on this 1215 level. If that holds for a day or two, the natural move for the market is to squeeze out the shorts who haven't been able to push the prices. So be watching that very carefully. Cable, as I said, much more bullish construct here, a series of higher lows, and took out we closed above the 20 SMA. Market definitely betting on the fact that there will be either a soft Brexit, a delay, or essentially a no Brexit as we push back to a 2-year extension. So unless we get, really, this scenario gets destroyed only if there begins to be this existential fear that we have a hard Brexit April 12th. Now, there'll be lots and lots of headlines back and forth, but I think in many ways the intense drama is kind of done for right now. This week is going to be a consolidation week, and if they can find any sort of compromise, out of Parliament, 1 or 2 DUP lawmakers saying maybe we'll vote for the deal will be enough to push this to 33, 34 and really challenge the 33, 33.50 and really challenge the near-term highs. So I think for right now, basically the bias on cable has to be bullish unless proven otherwise, given the fact that we've survived so much angst already. And yet, on the other hand, what a break. I mean, this is truly a massively ugly risk-off break here. Taking that down to 110s in one day, taking down 111s, 110s in one day. Remember, yen is a kind of a thing that moves one handle every month, and here we moved 2 handles in a day, that's a big, big sharp drop. Whenever yen does this, there is a lot of analogs here for further continuation. Remember, yen is a kind of a currency pair that does nothing and then it does everything all at once, right? It's kind of like war. Nothing happens, then everything happens in a matter of days. So here, the fact that we have these two sharp drops, you can see that whenever yen has big, massive expansionary movements, those are not one-day affairs. There's lots of continuity here. So the near-term continuity here is the 109 support right over here. If they can hold that, then probably we could rebuild and possibly reestablish a mild uptrend, because the uptrend really doesn't get broken until we sort of take out the 108.50s. But if this thing just kind of goes all the way down to 108.50, that's a very horrible, serious risk-off development. And it basically shows, first of all, massive failures on a longer-term basis, not just at the high 114s, but now at the 112s, a series of lower highs, and a signal from the marketplace that U.S. yields are dying. You look at the U.S. yields; they're at below 2.5, which is unfathomable. We were at 3.25. Everybody looking for the final big break above the 3% level, and now we're back to below 2.5. If there is ever evidence of the fact that we are turning Japanese, as that song goes, and by we, I mean literally the whole advanced industrialized world. Look at the Germany, look at US, look at Japan, which has been there for 25 years. This may very well be our future. So I think the macro factors right now pointing to possibly further lower yen. But now in the near term, we're obviously going to be just simply looking to see if the 109.50 can hold. That breaks down to the downside. I think they're going to run it all the way down, because I said yen really travels hard and fast when it takes on the move. That's the story in the majors. Wish you guys the best luck, the best trading. Boris, over and out.